Hello and welcome to the Stop Foreclosure webinar presented by the Florida Foreclosure Prevention Network and Xtreme by LPT Realty. My name is Tony Martinez and I will be your presenter. Before we get started, I want to give out the following disclaimer. This session is basically for and only for educational purposes. I am not an attorney nor am I a tax professional. I am not dispensing any legal advice nor financial advice. Please seek the professional assistance in those categories. I'm here just to discuss what options are available should you be going through a very difficult time right now and possibly losing your home. I am a licensed broker associate here in the state of Florida. I am co-team leader of Xtreme by LPT Realty. I also started the Florida Foreclosure Prevention Group. Now, we have no affiliation with any government agency. What I wanted to do was put together a group of dedicated professionals that have a passion to help folks that are experiencing mortgage difficulty, financial difficulties, and are going through the foreclosure process. We're here to help in as many different ways as possible. I also own and teach the CDPE designation. Now, within the real estate industry, the CDPE is very well known as being the #1 training program where realtors come to learn how they can assist someone that is in the foreclosure process, and especially if they have no other choice but to sell the property, how they can effectively learn how to do a short sale, which is one of the things that I will be discussing today. Now, this video is not a very long video. I learned a long time ago that people's attention span can be very, very short. I'm going to go through the material rather quickly, but I prefer to do it in this fashion versus an open Zoom format or an open webinar format, because those tend to have distractions. Sometimes you can't control somebody screaming or crying or doing something crazy. I wanted to make sure that the focus was simply on the information that I'm sharing, but you're going to have the opportunity to contact me directly or someone on my team to answer questions that you may have. So don't worry about it. We're going to give you all that information at the very end of this presentation. Now, I have been teaching this for a very long time, folks. I have a tremendous passion and ability for doing this. I lost count of how many real estate professionals I have trained over the years, but I think that number is at least 25,000. Now, I'm sure that there's going to be real estate professionals that are watching this video, but it's really not for them. Unless, of course, they're going through a difficult time and possibly in even the foreclosure process, but it's not meant to be an educational component for the real estate industry. This is about the homeowner. You are not alone. You know, you may feel that way. Trust me, I know, because I've been through foreclosure myself. During the great financial crisis. I know all of the emotions. I probably experienced every single one of the emotions that you might be going through right now. But when you're going through it, many times you feel isolated and you feel, wow, I have no one to talk to. You're afraid. You're desperate. Sometimes you end up making bad decisions based on a lack of information. You might even feel ashamed that you're going through something like this. Please, please, please don't. You know, bad things happen to good people all the time. There's a lot of factors that are beyond our control, beyond your control. And you're definitely not alone, because the foreclosures never went away. Contrary to popular belief, there's always been foreclosures. Now, we're not seeing the level of foreclosure activity that we did during 2008, 9, and 10, but it's not to say that we will never see those numbers again. And at the end, what do you care about those numbers, right? All you ultimately care about is the fact that you're going through a difficult time right now. And what can you do about this? The message that I try to convey all the time is as follows: foreclosure is not the only option. You know, sometimes it feels like there's nothing you can do. And so many times folks that are going through this, they just give up. You know, you're under so much pressure. There's just you're being hit by so much bad news left and right that sometimes it feels like the best thing to do is just to let the bank take the house. I couldn't disagree more. And I want to go ahead and share some information because there are some very negative consequences to foreclosure. And oftentimes the folks that are going through it, no one is really presenting this side of the equation. No one is really trying to educate them to make an informed decision. So let's go ahead and discuss, first and foremost, how does the Florida foreclosure process works? Because foreclosure is exactly that. It is a process, not a singular event. And because Florida is a judicial state, meaning that all foreclosures have to go through the court system, it is inherently very borrower or homeowner friendly because it takes longer for the process to be completed than it would in many other states across the country. There are some folks that are being foreclosed on by their association. Foreclosure can happen by not paying your HOA or condo association payments or your property taxes. But we see that the bulk of the foreclosure activity historically has been from not making the actual mortgage payments or from mortgage delinquencies. Where does it begin? Well, it begins with the first missed payment. You know, on day 31, if your payment wasn't made, you're technically in default. Now, that doesn't mean you're in foreclosure. I need to get that across to you. Maybe you're watching this and you're at the very beginning. Maybe you've missed one or two payments and you're wondering, are they going to knock on my door tomorrow? Well, it's in place. In fact, the federal government, dictates that the servicers are not even allowed to go ahead and initiate foreclosure activity unless you're 120 days late. And that applies for the traditional mortgages. It doesn't really apply or may not apply if you have a hard money loan or something of that sort. But for most folks, they at least have 4 months before the foreclosure activity action is taken. Now, it could take longer because contrary to popular belief, again, the banks don't want the homes. The banks just want to get paid. They want the mortgage to be current. The foreclosure for them is the last option or alternative. Now, let's say a reasonable period of time goes by and nothing has been done to correct the matter. Then at that point, the servicer will initiate foreclosure action against the borrower who is the homeowner. Now, in Florida, that is called les pendens. It is a legal process where they have to submit all this paperwork to the court. They're filing a complaint to initiate foreclosure action against someone. And if approved, yes, there will be a knock on the door at some point from a process server to go ahead and serve that individual with the paperwork saying you are being sued. You have foreclosure action against you. Now, write this down because this is critical. In Florida, upon being served, you have 20 calendar days, not business days, 20 calendar days to respond to that complaint. Sadly, one of the biggest mistakes that homeowners in distress make is they do not respond. They do not respond in any way, shape, or form. By not responding is essentially giving them the go-ahead to move forward. If you have not been served, that's good. Expect that it can happen at any time. If you have been served and you're still within those 20 days, then respond either on your own or through the assistance of an attorney. If you have passed that, then you probably already have received or will be receiving a letter saying, come into the courthouse, you're being summoned for a judgment hearing. And again, sadly, many homeowners in distress do not show up for this hearing. And at that point, the actual sale date is set by the judge. When you have a sale or auction date, that is typically game over. Whenever I reach out to someone or someone reaches out to me, the second question I always ask, the first question I always ask is, are you currently listed for sale with another brokerage? Because you are, I'm limited in what I can do to help you. The second question is, do you have a sale date? Because that's the last thing that we want, is to let the sale date come and go. Believe it or not, I was once contacted from a postcard that I sent out And the homeowner reached out to me and says, Tony, I need your help. I'm going through foreclosure. And I asked him, do you have a sale date? And he said, yes. I go, when is it? He goes, yesterday. And I went, I wish you had contacted me the day before, 2 days ago. I might have been able to help you at that point. But now, since it's already been foreclosed on and you are no longer the owner of the property, I, as a real estate professional, am powerless to help you. What you need to do now is hire an attorney to see if they see any irregularities, that procedures weren't followed. And it's going to cost you a lot of money to possibly go ahead and vacate that foreclosure process. In Florida, we have this small redemption period that after the sale date, it takes about 10 days or so for the sheriff to issue a certificate of title to the new owner. During that time, a real estate agent cannot list the property for sale and help you. That is normally a time that maybe taking some legal action may buy you some additional time. Often it does not. But again, that is only something that you having a conversation with an attorney. And when we're talking about foreclosure, it's you want to speak to a real estate attorney, and better yet, a real estate attorney that specializes, write this down, in foreclosure defense, because these are the ones that do exactly that. They focus every single day almost on helping folks stop the foreclosure process within the court system. The process can take several months, but it is moving significantly faster than it did many years ago. Do not be lulled into the sense of security that you have a year, 18 months for this to play out. You may only have a few months. And every day that passes is one less day that you have to take action. Now, usually the best person to talk to about how much time you may have is a foreclosure defense attorney, because they are involved every single day and are seeing how quickly or how slowly the court system is working in that particular county. Now, let's talk about the negative consequences to foreclosure. Let's say you don't take any action. You're not able to stay in the home. You're not able to take action to allow you to exit with dignity, and you end up being foreclosed on. Well, it's going to have a major impact on your future as far as your credit is concerned and other areas. Here's an example. Foreclosure can stay on your credit report for up to 7 years. In fact, many people that have foreclosure filed against them also have bankruptcy. In bankruptcy, you'll stay on your credit report for up to 10 years. So here's what this means. Your credit is going to be severely damaged. You probably end up paying significantly more for just about everything you purchase financing-wise in the future. But here's the biggest thing. And I always ask someone that's just thinking about walking away, I ask them, you know what? Is it important to you that your credit is going to be really badly damaged? And they might say, Tony, I could care less. I'll just pay for everything cash going forward. I go, okay, all right. Well, let me ask you this. You think you ever want to be a homeowner again in the future? And what do you think the answer typically is? How would you answer that? Your answer is probably going to be, yeah, of course I would. And I would say, well, okay, well, factor this in. Do you want to live with the restriction of not being able to get traditional financing for anywhere from 5 to 7 years because you have a foreclosure on your record? Or let's say we effect a short sale. And again, I'll explain exactly what a short sale is a little bit later. But if we're able to successfully do a short sale, you might be able to be a homeowner again in as little as 2 to 3 years. So here's what I'm trying to do. And here's what I try to do every single day when I'm training agents. You have to think far and beyond the situation you're in right now. When you're thinking about right now, it's not a pretty picture, right? It's a very dark situation you're in, but there can be a light at the end of the tunnel. I know because I've lost properties to foreclosure. I know what it's like to feel like there's no hope or anything else, but not giving up, continuing to move forward, I have been able to recover and then some from that. If I can do it, you can do it. Just keep in mind, once a foreclosure is on your record, you're always going to have to disclose on any future loan applications for a property, for financing on a property, that you did have a foreclosure against you. And yes, your credit score is going to take a heavy ding. I can't give you exact numbers, but it's going to be a significant drop in your credit score. Now, the other issue a lot of folks don't think about is, what if having a foreclosure on your record prevents you from getting a job, a job you always wanted? What if you are currently employed, you have a foreclosure, and your employer's policy is if you have a bankruptcy or a foreclosure, you cannot stay in that position, or you cannot stay with that company, period? Won't that make your situation significantly worse? That now you lose the home, and on top of that, you have a difficult time finding work, or the work that you, or the career that you want to be in. This especially applies if what you do for a living or want to do for a living requires a security clearance, because a security clearance can be nullified having a foreclosure or a bankruptcy on your record. And so many professions now use require security clearance, anywhere from law enforcement to military to certain government positions, certain private positions. If this is you, please speak to your HR department, speak to, if you're the military commanding officer or someone, make sure that you understand what the ramifications may be. One of the reasons why individuals that have a security clearance are more apt to consider working with a real estate professional to get the property sold, whether an equity sale or a short sale, is because the last thing that they want or need is to have a foreclosure on their record. Okay. Now, Florida is a deficiency state. And this is kind of like adding insult to injury. That means you can lose your home in foreclosure. And there's two scenarios when you lose your home in foreclosure. You either have equity, that means you could have sold it and walked away with money. Well, by letting the bank take the home, you're not going to walk away with any money up front. You're going to have to wait to get your money, and you're going to probably get significantly less when they deduct all of their fees and expenses. The other option is that you're underwater. That means you owe more than the property is worth. You cannot sell the property for enough to pay off the liens. Now, the bank forecloses, turns around and sells it, loses money because the property is not worth what it was before, but the bank is still owed a certain amount. Well, you know that in Florida, the bank or banks, because you may have a first and you could have a second, etc., they can pursue legal action against you to recover what was lost. That is called a deficiency judgment. You don't have to worry about the potential for deficiency judgment if you had equity. All right. So put that aside. But if you didn't have equity, that is a possibility. See, when you don't have equity and we're able to do a successful short sale, more often than not, overwhelmingly so, we're able to get the bank to waive the right to pursue any legal action against the borrower. So again, just another reason why the last thing you want to do is just give up and let the bank take the house. Not to mention that there's a tax liability. In the case of a short sale, the bank is losing money, right? Well, when a bank loses money, they have one or two options. They could choose to go after you. More often than not, they don't. More often than not, they go ahead and they forgive it. They waive it. Well, now you're subject to tax consequences, because we are in this country, forgiven debt is taxable income. It is important you know this, because you don't want any surprises, right? And oftentimes individuals that are not versed in this area don't know how to explain this properly to a consumer. The good news is that you may have an out. You may have a way of either reducing that tax implication or eliminating altogether if you qualify for this program that was instituted during COVID. When COVID was in place and the CARES Act was passed, the qualified principal residence indebtedness exclusion, I know that's a mouthful, was introduced, QPRI for short. And it's just basically it's as follows. If this property is your primary residence, right? And the monies that are owed were used to go ahead and purchase the property, or maybe you refinanced or you borrowed against the property and the monies were used to significantly improve the property with certain limits, you may not have to pay as much in taxes or anything at all. I really can't get into a lot of details here because it can get very confusing. And as I mentioned at the very beginning, I am not a tax professional, but we always recommend that you speak to one, especially one that is well versed on this exclusion and understands what options are available should you not qualify for this exclusion. Okay. So now we want to do everything possible to help you stay in your home. And the only thing that we can really do as real estate professionals is just to make sure that we ask you if you have explored any and all options available to possibly do that. And sometimes, too many times, one of the biggest mistakes that homeowners in distress make is that they do not speak to the servicer. All right. If you have not picked up the phone, if you have not responded to any of their letters, you're making a huge mistake. You need to get on the phone with them and put all your cards on the table. I'm not saying it's going to help you stay in your home indefinitely or even for an additional period of time, but more often than not, it can buy you more time. It's just a shame to not explore what options are available to you. Let's talk about a couple different scenarios, okay? Let's talk about a scenario where maybe a person loses their job and falls 2 or 3 months behind on their mortgage payment, right? And then they're able to get employed again. They can make all of the payments going forward, but you have this unpaid balance, right? It's these 3 payments or so that have gone unpaid, plus any penalties or fees. Well, what do you do with that? Well, maybe the person has it in their savings. Maybe they can borrow it from a friend or family member. All you got to do is find out what the amount is, wire that money into the bank. And even if they had initiated any foreclosure activity against you, probably not, then it's gone. It doesn't matter. You are current. You're golden again. All right. So this is something to explore. Now, what typically happens is somebody goes way beyond this point, and that's where maybe this option comes in. Let's say it's a similar scenario. You're behind 3 or 4 months. Why? Because you lost your job. What has changed? I got a new job. Well, that's great, right? You can make your payments going forward, but you owe 5,000, you owe 6,000, you owe 7,000, whatever it is that it equals those mortgage payments that are missed plus any fees and penalties. You don't have an angel that can loan you the money, or you don't have the money in a savings account. So what do you do in that scenario? Call the servicer, explain to them your situation there and say, can you just work with me? Can you give me some time to make up what I owe? And again, no guarantees, but there's a good possibility that they'll work with you. But now here's what they're going to want to know. They're going to want to know, okay, so tell me about your situation. What brought you to that point? Okay. All right. So you lost your job. All right. Now tell me what has changed. Well, I'm employed again. They're going to want proof. They need to see exactly what your income is, what your expenses are. Because here's what you have to prove. You have to prove that you can make the payments going forward. But it's not the same payment you were making before. The payment's going to be higher. Why? Whatever amount you owe them, let's say that they're able to give you 2 years, 3 years to pay that back. That's going to be several $100s extra per month that's added on to your regular mortgage payment. You have to be able to demonstrate that you can afford to make those payments. Next, refinancing. Typically not an option. I've only seen this exercised a couple of times and under very unique circumstances, because if you're already behind on your payments, it is highly unlikely that you're going to qualify for refinancing. If you're underwater, the property doesn't qualify for refinancing. If you are not employed or if the income is not sufficient, then refinancing is not a viable option. Now, let's talk about loan modifications. These became very popular in 2008, 9, and 10, and so on, because there was a lot of governmental pressure on the banks to work with the consumers. And basically what they did is they took all these past due payments and they put it on the back of the loan or as a new loan on the property. And sadly, a lot of folks forget that that money was not forgiven, that that money was added on as, say, a partial claim mortgage or added on to the mortgage amount. It is critical that you know exactly how much you owe on your property. You need to get a payoff as quickly as you can. Now, the modification works essentially this way, right? You're going to the bank and you're saying, I can't afford my payments. I need you to help me. The first thing they're going to determine is, can you even afford any payments, right? How difficult do you think it is to get the bank to agree to lower the payments for you or buy you more time if you don't have sufficient income to make the payments? So I can't tell someone, don't even bother talking to the bank if you don't have the income. That is not my place, but that's probably the answer that you're going to get. Now, when a modification is done, it typically does not lower the principal amount. They typically do not forgive the unpaid payments. What they do is lower your interest rate to a certain amount, or maybe even stretch it for, instead of a 30-year mortgage, a 40-year mortgage, so that they can kind of artificially bring the payments down. To say, okay, you were paying $2,000 a month, or you weren't paying $2,000 a month, but now we got it down to $15 a month, right? You can make that, right? And just keep in mind that in today's environment, the loan modification may be even less attractive, because if you're sitting on a relatively low interest rate now, let's say you have a mortgage that's 3%, and you apply for a modification. Well, what do you think the interest rate on the new modified loan is going to be? Probably higher than 3%, right? So you may be looking at a scenario where your payments are not only the same, but even higher. But again, speak to them. Find out if there's even an option for this. Also, if you do engage in a conversation with them about a modification and you're going through the vetting process, they have to cease foreclosure action against you during that time. That's called dual tracking. They're not allowed to be engaged in a loan modification process with you and also, foreclosing at the same time. So it's in your best interest to at least attempt, and they may deny you right out of the gate, but at least make the attempt. Now, bankruptcy is not something you should ever take lightly. Again, I'm not an attorney. I am not recommending bankruptcy. Bankruptcy is used as a strategy when everything else has failed. Let's say, for example, you have a sale date coming up in 3 weeks. You hire an attorney, a foreclosure defense attorney, to go out there and do their best to go ahead and stop the process. They go before the judge and they present the argument that this individual is trying to sell their home. They want to get out. They want to get on with their life with the least amount of negative consequences. Well, can you please grant them that time? And let's say the judge, for whatever reason, says no. And sometimes the judge says no because the borrower has done this several times before. This is something that you need to keep in mind if that's you. If you have had your sale date pushed back several times, well, you go to the well too often. One of these days, you come up dry. The attorney is not able to go ahead and be successful at that. And by the way, the question is asked a lot. Well, who pays for that attorney? Well, you would. Okay, that attorney becomes your responsibility to pay. And they're going to be paid their monies, whether it's $750 or $500, whatever their rate is. You pay that amount regardless of whether they're successful or not. Let's say they're not successful. Is it game over at that point? Not necessarily, because bankruptcy stops everything. And this becomes a decision that a homeowner in that situation needs to make, with maybe consulting for a bankruptcy attorney or maybe a tax professional. But if the bankruptcy isn't done, then there's absolutely no chance whatsoever of buying more time. If the bankruptcy is filed, it stops everything. Yes, there are some negative consequences on your credit report as a result of that, but it typically will buy you the time necessary to get your home on the market and get it hopefully priced right and sold and closed so that you can get on with your life. Again, I am just presenting a very broad 10,000 foot level explanation. If you need more time, if you have questions, you're going to be feel free. I'll give you my contact information so that I can talk this through more. Again, not from a legal or financial perspective, from a real estate perspective. Sometimes the homeowner desires to go ahead and rent the property. Let's say someone says, you know what, I can move in with mom and dad for a year or longer if need be. We don't want to lose the home. We feel that if we can rent it for this amount, we're going to be able to afford to keep it. And on the surface, it sounds like a viable strategy, but there's some things to keep in mind. For example, what happens if the tenants don't pay? What happens if the air conditioner breaks down? And here in Florida, that you can't go one day without air conditioning. What's it going to cost? $10,000? Do you have 10,000 laying around to do that? And here's the other thing too. You should not be renting a property to a tenant while you're in the foreclosure process. Many times a landlord will never disclose to a tenant that the property is in foreclosure. And that landlord collected first, last, and security from that tenant. And they're still in foreclosure. They're still behind on their payments with the bank. And lo and behold, one day there's a knock at the door, and guess who is served the papers? The tenant is. Can you imagine how devastating that is to them and the potential legal ramifications to you by not disclosing that and taking their money? And you're taking their money, but not making the payments yourself. So that's something you really have to think long and hard about. Now, let's say you've exhausted every single option to stay in the property. You've tried. It's just not going to happen. And usually it's because just the income isn't there, right? What do? What you don't do is just give up and say, bank, here, take my house. Here are some options for leaving the property. If you have equity, now, equity is the difference between what you owe and what you can sell it for, less expenses. I'll give you an example. One of my CDPs told me this story about a gentleman losing his home and was offered $10,000 by an investor. You have to be real careful because when you're in foreclosure, all of the vultures come out. There are folks that'll knock on your door and they seem very innocent and very willing to help you. But in many cases, all they want is the title to your home. And I hope that this hasn't happened to you. And if they do knock on your door, whatever, again, I would not let them come in. All right. Because I've seen too many cases where the people have been burned. In this case that I'm telling you about, the person was offered $10,000. Now, when you're desperate, right? $10,000 could seem like a lot of money. But this person, the CDP, said, hold on a second. You have a lot more equity than that. List the property with me. Let me help you. She was able to successfully arrange assistance so that they were able to get the sale date pushed back. She listed the home for sale. She got it closed. Guess how much money this gentleman walked away with? Instead of $10,000, he walked away with $80,000. Now, that $70,000 spread, that's the money that investor would have made on that property. But thankfully, rightfully, it goes into the pocket of the homeowner. So be very, very careful. If you have equity, the best thing you can do is list it for sale. It is really essentially a regular sale with one caveat. You do have to be careful that everything gets done before the property is sold off in the auction. So you don't want any old realtor to help you in this scenario. You want someone that's skilled in working in these scenarios. And you know what? I believe my CDPEs, people that have taken my course, are as skilled, if not more so, than anybody else out there to help you. Okay. Again, not all realtors are created equally. Not all CDPs are created equally. But if you're within the sound of my voice and watching this in Florida, there's a pretty good possibility that me or my team is in a position to help you. You at least want to explore that option. A good agent is going to verify exactly how much you owe on the property. They're going to ask you for payoff information. They want to know, do you have multiple loans? They're going to say, let's perform a lien search against the property just to make sure that there's no surprises. There are folks that took advantage of the government's offer for forbearance agreements during COVID. What if that's you? What if there were payments you didn't make that were put on the back of the loan and you're not even aware that there is a loan for X amount? And that's happening every single day in our business. People think that they're going to net a certain amount and they find out that there is a loan that they didn't know about, a lien they didn't know about. Now they're netting significantly less. In fact, in some cases, many cases, they thought that they were in an equity position. It turns out they were underwater. So the only choice was to do a short sale. But what if they found that out after they had a buyer already? And the buyer was never told that they were entering into a short sale transaction. This is imperative that you understand exactly how much you owe. You know, one of the things that we have found is once the property is listed and you're in the foreclosure process, a good real estate practitioner is going to get on the phone with that servicer, right? They're going to get you to sign a third-party authorization form so that they have permission to speak to them. And they're going to get on the phone and say, look, I have this property for sale. Can you just please slow the process down on your end? No guarantees, but it is a possibility that the bank can say, well, show me proof that it's listed. I have that. Well, what else can you give me? I have proof that I have it under contract, because especially if the bank is going to be made whole, the bank is going to get all their money. Why wouldn't they want to give you enough time to go ahead and get the property sold so they can get all of their money? Okay. But always, always keep an eye out for an auction date. You may not have a sale or auction date today, and that can change overnight. So you're constantly monitoring this. Now, a deed in lieu of foreclosure is essentially handing the keys back to the bank. The challenge there is that banks don't want the houses. Banks are not there in the business to own the home. We don't see a lot of deed in lieus. In some cases, it's because the real estate industry doesn't even bring it up because the agents don't make any commission on a deed in lieu. But in most cases, it's really not in the customer's best interest. Again, this is something you want to discuss with an attorney, because chances are the bank won't even agree to it. The bank's going to say, hold on a second, why you want to give me the keys? Just list the house for sale and sell it yourself. We just want to get paid. If there's multiple loans against the property, they're probably not going to want to pay off the second to keep the property. And just keep in mind that if you do a deed in lieu, make sure an attorney reviews the paperwork, because just because they agree to the deed in lieu doesn't mean that they waive the difference should be you be underwater. Okay, keep that in mind. Here you are, you're underwater on the property, you give back the house, and they might still pursue a deficiency judgment against you. And if it is underwater and the bank does lose money, there is the potential for the tax implications as well. Again, I have not seen many scenarios where the deed in lieu is actually in the best interest of the customer. Usually, when the customer is not able to stay in the home, after having conversations with them, they arrive at the decision that it's best just to put the property on the market. I visit bankruptcy again just because I want you to be very, very clear that the only way bankruptcy keeps you in the home is if you do what is called a Chapter 13, where it is a payment structure. I cannot go into details about that because I'm not an attorney, but if you have the potential to be able to make the payments going forward, you might qualify for the bankruptcy protection under Chapter 13. We can definitely connect you with a bankruptcy professional, bankruptcy attorney, so that they can discuss this with you to find out if this really is a viable option for you. Now, a short sale, I've mentioned that 2 or 3 times now. It's essentially when the property is not worth what is owed against the property, it is listed by hopefully a skilled real estate professional with the intent of getting it under contract and then working with a professional negotiator attempting to get the banks to agree to accepting less than what is owed against the property. Yes, we have to convince the bank to lose money on the transaction. And they're not doing it to be nice. They're doing it because it's in their best interest to just get this issue resolved, as opposed to letting it be prolonged for 6 months, 12 months, or longer. And the property may be, in the meantime, the wear and tear and it's not maintained and everything else. When a short sale is done, title is free and clear and released, and a new buyer gets to go in there with no worries. Now, it is not intended to get me out of my mortgage-free card. That was something that was abused a lot in 2008, 9, and 10. The banks are so much smarter now. Plus, if this was someone's intent, I would not represent them anyway. A short sale is for those that meet the qualifications. It is not intended for someone that is strategically defaulting, which is you can make the payments, but you choose not to. I'm not saying that there are not realtors out there that would represent you in these scenarios. It's just, it wouldn't be me or anybody on my team. When we know a property is underwater, we have a conversation with that homeowner and we explain what the 3 major qualifications are to be an ideal candidate for a short sale. Number 1, there must be some type of what we call hardship. A hardship is that something went wrong, some type of material change has taken place that now prevents that homeowner from making the payments. And these are some of the most common ones right here. This is not something that a homeowner can fabricate. They must be able to provide documentation to prove that this is in fact happening with them. The second thing they look for is a monthly income shortfall. You have to show that every month more money is going out than coming in. That just makes sense, right? You have to provide full documentation. Full disclosure is required. Last but not least, the ideal candidate is insolvent, which is a fancy word for broke. And what I always explain is if you have a ton of money sitting in a savings account and you're seeking relief from the bank in the form of a short sale, that's going to be very difficult because the bank's going to say, well, just take the money you have in the bank and pay us. So the ideal candidate has very little to no assets. Now, there are folks that have IRAs and 401ks. They don't have to worry about that money being seized. The funds cannot be seized because they're retirement accounts. But a bank that's making the decision to do a short sale or not, they can factor in those funds into their decision making. They can say, well, wait a minute, you're sitting on quite a bit of nest egg there. I'm not saying we won't work with you, but we may need you to bring something to the closing table in the form of a contribution. That conversation is one that I have with someone that I believe is less than an ideal candidate. It's not to say I won't represent them, but I want to make it very clear that given their circumstance, there is the possibility, not necessarily the probability, but the possibility that the bank may say no or may say yes with some conditions. Okay. The strategy for delaying the sale date, if push comes to shove and you only have a few days or a few weeks, we see this happen a lot. Sadly, people come to us and they wait to the very last minute. The first thing that we try to do is see if an emergency hearing can be scheduled with the attorney pleading the argument of trying to give these homeowners more time. Typically, a listing agreement is not enough. A purchase contract is required. The foreclosure defense attorney does not want to go in empty-handed. They want to be able to go in with as much, what should I say, much of an argument to go ahead and try to get the bank to go ahead, try to get the court to go ahead and work with them as possible. Now, again, as I mentioned before, if you've done extensions before, several extensions before, you may be out of luck. Okay. Now, if that doesn't work, then the last thing to do is that for the bankruptcy. And I talked about this before. It's not a decision you take lightly, but it may be the only thing that you can do to stop the foreclosure, because it puts a stay of foreclosure, and then the lender has to basically file a motion to lift the stay. And by the time you get around to getting a new sale date, you probably are able to buy yourself several months, which, if used effectively, can put the property on the market, get it under contract, and get it closed before then. If you are military, if you're active military, you may receive protection under the Service Members Civil Relief Act. Definitely bring this up. If you are active military, you must bring this up early in the conversation with either the real estate professional or the attorney involved, because there may be some relief available to you that is not available to the civilians. I know I've hit you with a lot, and at this point, your head may be spinning and you're thinking, what is the next step? The next step is find out what stage of the foreclosure process you're in, okay? Based on what I shared with you today. Check to see if you have a sale date. You know where you can do that? You can do that through the courthouse. Just go to the courthouse site for whatever county you're in. There's a foreclosure division, and you can look up your docket. You have a docket number, or look it up by address or by your name. Find out if you have a sale date. Seek legal assistance. Talk to the servicer. If you don't have an attorney, we can recommend one. Talk to the servicer, especially if you've never had a conversation before. Tell them what's going on. Ask them what can they do to help you buy more time? What can they do to maybe possibly help you stay in your home? And then at some point, contact a knowledgeable real estate professional. Now, if there was an agent that sent this video to you and said, look, I think this is something that would benefit you to watch, then contact them, because they took the steps. They made the effort to send this to you as a resource. Grant them the courtesy of going back to them to see if they're qualified and skilled enough to help you to get through this, okay? If you're not represented by anyone, if you just found this video on YouTube, or you did a search or whatever, and I came across, like, I may know what I'm doing and that I have a passion for doing this, reach out to me. You know, I've had folks that have reached out to me from other states, and I've said, look, I'm not licensed in those states, but I can connect you with a CDPE in your state. If you're in Florida and you're in the area that I service, which is South Florida, myself, my team, we can help you. If you're in any other part of Florida, we can refer you to somebody within our network. I just don't want you to do absolutely nothing. There is our email address and there is our phone number. It doesn't cost you anything to reach out to us. I am happy to have a conversation with you, so long as you understand where I'm coming from, not as an attorney, not as a tax professional, but as a professional realtor, and as someone that actually cares, someone that's been through what you're going through. Have a conversation with me. What can it hurt? So again, I thank you for your time and attention. I am deeply sorry that you're going through this difficult period, but please, please take action. Take action. Foreclosure is not the only option. Thank you very much. Take care.